Hello Sky Traders, welcome back to a new video. This is Mina, your trading coach. So let's get started. In this video we're going to cover the euro dollar and we're going to discuss three important analysis approaches, which is the fundamental analysis, the technical analysis, and the sentimental analysis, or what's the bias of the big players in the market, big ways and market makers, right? So let's start by identifying the trend and our trading range. All right, so we're gonna do a top-down analysis. So we're gonna start with the weekly, daily time frames, and this is gonna be so important for position traders and swing traders. Then we're gonna drill down to the 4 hours, 1 hour chart, and then 15 minutes and 5 minutes chart, and this is gonna be so good for scalpers and intraday traders. So on the weekly chart, we clearly see from a technical point of view that we are in a downtrend, creating a lower highs and lower lows, some order blocks in some cases, and huge sell orders is being pushed through the market. And the order flow direction or bias is downtrend, right? So we start with this order block, and when we see those wicks creating an order block, we understand that big players and large institutions are trying to protect their orders. So we can see a huge shift in direction from this point. And we had the confirmation by this high pressure sell candle on the weekly time frame breaking this market structure, so we can understand that we are starting a downtrend. So from a technical point of view, we are in a downtrend order flow, right? And as we mentioned like several times before, that whenever we have an expansion in a specific direction, either we have a consolidation or a small retracement, right? So every time price broke an important level or a market structure, either price is consolidating, such as in this area, or retracing back to the market structure which the price broke or important level. In this case, for example, right, created a huge market structure, then broke it, tried to trade back, and so on and so forth. And we can have another confirmation by drawing the Fibonacci retracement. So from the high to the low of the range, of the trading range. For example, we can see that price tried to trade to 50%. This is aligned with the order blocks and huge sell orders that were placed at this area. And then if we move this Fibonacci to the next trading range, again 50%, price tried to trade to 50%, moving to the next range, 50%, and then the next range, 50%, next range, 50%, and so on and so forth. So we can combine that price is breaking market structure, consolidating, or retracing, aligned with the Fibonacci retracement, which should be within the 50% range. So if we are in a downtrend, 50% or higher, or if we're in an uptrend, 50% or lower. And that's because usually market makers sell at a premium price and buy at a discount price. So let's identify our trading range that we're currently trading in. So this is the current range, right? From the previous market structure to the low of this range, right? So I identified the previous week trading range, because if we break this trading range, either we're going to have slight consolidation or retracement within this trading range and then a continuation in the downtrend, or a small consolidation that could happen next Monday, and then price continues its direction, downtrend direction, right? So let's go to the daily time frame. So we had a break in market structure, and then price tried to trade back to this area during Friday, and we had this important news release which delivered the price way down from the liquidity void area, and we discussed in our weekly analysis video why this is a liquidity void area. But also keep in mind that Forex market is manipulative, right? And a lot of people participated in the market during this release. Market can try to take out all of those traders from the market who placed the orders during the news release and then continue its downtrend. Or we can have some consolidation in Monday and then we can see a breakthrough this consolidation area during Tuesday, Wednesday, and Thursday. Remember, when we execute orders, we wait for the perfect time of the day and the week to execute those orders, because if we expect a breakthrough important area, reversal, leave of consolidation area, we can expect those to happen either in London session, New York session, or an important news release. So now on the daily time frame, we completed the trading range, right? This is the bottom of the trading range and this is the top of the trading range. But still, so far, we didn't take all of the orders that were placed previously back in 14th of July. Because if we did so, we would have seen huge sell pressure candle, right? So let's move to the 4 hours time frame. So over the past week, we were creating higher lows and higher highs, which is basically an indication of an uptrend, at least for a short time. But also keep in mind, even if we had this high rejection from this liquidity void area, we still didn't break this market structure that we created in 26th of August. Again, since Forex market is manipulative, so we can see price trying to take out all of those orders that were previously placed during Friday news release, to kick out all of those traders. Or once we see a break of market structure, this is a market structure, so once we see a break of market structure, and this should happen with a high pressure sell candle, and this most probably is going to happen on Tuesday, and even if it happened on Monday, we're going to wait for Tuesday because it can create a fake out, right, in Monday. So let's move to a 1 hour time frame. Let's remove all of these drawings. I have a clean chart. Alright, here we go. So let's have a look at the buy model, or the buy bias model, and the sell bias model, right? And see how price is likely to behave in both models. Huge pressure in the downtrend, but price didn't break through this market structure, right? So we can either see a consolidation and a fake break of this consolidation to take out all of these buy orders, and then price can go down, which should align with a 50% Fibonacci retracement, and at the same time trading back to a previous broken market structure. And this break of market structure should happen at an important time, whether New York or London session, with a high pressure sell candle. So we're not looking for those kind of candles, we're looking for something significant. And then price will try to approach those areas, since a lot of buy orders are being placed and can be represented by those high pressure buy candles. Or if we're considering a buy model, then slight consolidation or rejection from this area and creating an order block, and then we can see slight consolidation again at exactly 50% or higher than 50%, at which market makers are trying to collect orders in the buy direction to take out all of those stop losses and approach this liquidity gap. So if you'd like to enter a sell trade, just keep in mind to have your stop loss right above the 50% level of Fibonacci retracement, so that you can have more room and breadth for your trade if price is trying to manipulate sellers. And if you are placing a buy order, again, try to place your stop loss right below this market structure, because a lot of buy orders are being placed over and scattered over this area, and if market is moving upwards, then market makers need to collect all of those orders and liquidate all of those orders. So price will probably consolidate, fake breakouts through the downtrend, and then continue its uptrend. And on the higher time frame level, I consider this area as a consolidation, the whole area, right? Price is trying to collect orders in both directions, and we can clearly see this on the 4 hours and 1 day chart. If we are continuing our downtrend, then we need to see a break through this area with a high pressure sell candle, most probably on the 4 hours or 1 day chart. Then we can continue our downtrend. So let's have a look from fundamental point of view. This week we have important events related to Eurozone. We have on Tuesday, August 30, the business climate and consumer confidence. This is gonna be 11 AM GMT plus 2 or CET. Also, we do have the harmonized index of consumer prices, and this is gonna be related to Germany, but again, it's gonna affect the euro. This again, August 30. And we have some less significant news related to USD, which is the housing price index and S&P home price index. Consumer confidence is gonna be also released August 30. We do also have the on August 31st the unemployment change in Germany, which is going to affect the euro generally, and we do have the HICP month over month and year over year also in August 31st. This is going to be published 11 AM CET, and this basically captures the change in the price of goods and services. So it's really significant to measure changes in purchasing trends and inflation in the Eurozones generally. And the ISM manufacturing PMI in United States of America is going to be published 4 p.m. CET Sep 1st, as well as the non-farm payrolls going to be 2:30 p.m. CET Sep 2nd. So there are really significant releases this week. And whenever we have those releases or a week full of important news releases, we can expect some consolidation prior, because again, market is trying to build orders and is not going to move or expand one more time unless a significant release or volume in the market exists. Also, let's have a look at the average true range. I usually don't use indicators in my trading, whether analysis or execution, but I use this indicator on the daily time frame to expect the daily range of the market. So whenever I place a stop loss or take profit, I make it realistic compared to the current market conditions, at least for the last 14 days. So now the daily range is around 100 pips. So it doesn't make any sense to place a trade with a 10 pips stop loss. Even if you're right, you're gonna be stopped out, because it's almost like 10% compared to the daily range of the euro dollar. Let's have a look from a sentimental perspective. This is the COD, or the commitment of traders report, and as we can see that the red line is in an uptrend, which represents the commercials or the central banks, which we consider the market makers are constantly buying, which indicates a sell trend on the long term. So basically, I use commitment of traders report to analyze the price on the long term, the currency pair on the long term, not to execute or take actions based on it. It's just to give me more confidence on my trading bias. And by the way, we're discussing this in details in our pro course, so don't forget to have a look at it to know how to read the commitment of traders report and how this can influence and give you more confidence in your trading decisions. And this is also really important for swing and day traders. And again, it can influence your buys even if you're a scalper or intraday trader. So again, on a buy, and we can see that on 27th of June, we had a shift from sell positions to buy positions. So market makers or commercials are constantly buying. So this can indicate a huge downtrend. And we can expect high volatility this week because of the news releases, and that we are in consolidation area, so we're expecting a breakthrough really soon. So let's have a look at how this week can look like. So I usually don't trade on Mondays, because usually Mondays have huge manipulation and I wait for the confirmation, and I trade Tuesday, Wednesday and Thursday. So basically I usually don't trade Mondays and Fridays. But what we can expect to see in Monday is, if we're in a buy model, we can small consolidation during Asian session, and then manipulation to happen during London session, taking out all of those buy orders, and then we can expect some retracement during New York session and then expansion in the buy direction. And this is going to happen if on the higher time frame market is trying to take all of those sell orders that were previously placed during the news release on Friday. This is in case of a buy model. And then we can continue this expansion and open Tuesday with some consolidation in Asian session, manipulation in London session, then slightly retracement during New York session, and then expansion in the sell direction. Wednesday, you can see consolidation, Asian session, manipulation during London session, and then expansion during New York session. So that we can continue our uptrend, right? This is in case of buy mode or buys. Just mirror this chart to have the sell model. And as I mentioned many times before, as traders, we're not looking to capture all of the moves. If you're just risking 0.5% per trade with a 1 to 3 risk to reward ratio, so this is basically 1.5. So this is basically 1.5% return. And if you're trading one of our accounts, let's say 100K account with Sky Traders, so you're making 1,500K in one single trade. So we don't really focus to capture all of the moves and all of the pips. We just focus for the perfect time entry that's aligned with our trading hours and sessions, price action, and important news release. So sell mode or sell bias, again, we're going to have a slight consolidation, then take out all of the order. And even if we're in a sell mode, I still can see some retracement from this area because, again, includes a huge number of buy orders. So I can see some retracement, at least to the 50% Fibonacci retracement, and then we can see expansion during New York session. Tuesday, consolidation, manipulation, and expansion, and so on and so forth. And then, this is going to be our new trading range. We're going to cover this area maybe on Tuesday, Wednesday, and then cover this area and continue our downtrend. And again, if we expect to see a breakthrough this market structure on a 4 hours or 1 day time frame, this is only going to happen in important news release, and we're going to see a huge sell pressure candle. So guys, this is our analysis for this week. Don't forget to comment down below which trading pair or crypto pair you'd like us to analyze for the next week. Also, don't forget to watch our weekly recap so you can have the big picture. And as always, trade safe.